Anyway, here we go. Justine Footwear sells one brand of running shoes. Can you see? It's because every brand of running shoes would have its own calculations. Okay. The business uses the weighted average method. So, value the closing stock. So what are we going to do with the closing stock? We're going to draw a very long line. And we're going to say, let's put the rand on top of the units. And I'm going to keep in mind the opening plus the purchases less the returns plus the carriage plus the customs. But I'm also going to remember the carriage and the customs is not part of the units. It's just loading the rand. Okay. Because if I buy this phone for 100 rand, but there was carriage on it of 10 rand, now the phone costs me 110 rand, it's still just one phone. Everybody with me? Okay, so I start. They tell me my total value, including carriage, on the 1st of March is 101,090. And the units is 206. Right. Now I go to the purchases, and you're literally going to take these totals at the top. So I see the purchases is 2236700, and the units is 2490. So I've done the opening, I've done the purchases. Then they tell me carriage. A fixed cost of 25 rand per unit is paid on each pair of running shoes delivered to the shop. And this didn't change. So, how many running shoes were delivered? 2490. So what is 2490 times 25 rand a pair? That's a very big delivery cost. How much is that? Anybody? 25 times. Okay, so I've done the carriage. There is no customs, but there is returns. 60 pairs were returned. So I'm going to subtract the 60 pairs that was returned. Okay, that 60 pairs were returned. A refund of the cost price was received from the suppliers. It's from the September batch. The September batch was 900, right? And the carriage was not refunded. There we go again. So I'm going to work on the normal price there. I'm not going to do anything with this carriage. I'm just going to subtract what was sent back. The 60 times 1120 gives me 200. Can you just finish your sentence, baby? 67? 200. Okay. I made a mistake. What we did is I times with the units, not with the price per unit. So it would be 60 times 900. Can you see they're ignoring the carriage? So this gives me not 67 but 56. 54. Okay. Can you see they're ignoring the carriage?
Why do you ignore the carriage?
Because it was not refunded.
So you just leave it like that.
So in other words, you were only refunded for the return. You see, but that's... So always just remember, you're not going to add the carriage with it. If they said the carriage was also refunded, you would have added the carriage with the 54 for the 60 units. So it would have been 300 rand extra. Okay. So now I'm going to do get an average price. Yes.
And where do we get the 6225?
So that is my carriage, and the carriage is 5 rand, 25 rand a pair, and I bought 2 for 90 pairs. So I times those two.
So it's the carriage for a year.
Okay, who can give me the average price? Quickly just add for me, what is the total for that top? What is that top total? And what is the bottom total? 2?
460.
And the bottom? Anybody? Okay. Now if I divide that, I get and round it off to 2 decimals. How much is it? 89 on the dot. Okay. And that 890 I'm going to times with the closing stock of 420, which I get here, and that will give me
378 no 3738 puppies.
No, it doesn't feel enough. 890 times 420 gives you only 300,000. How sure are you? I am not sure that you are right. I'm going to... Really?
Yes.
This doesn't feel right. Okay. Let's go on. So the next one, the stock turnover rate. But let's first just see. Yeah, they just say stock turnover rate. So the stock turnover, I want you to work in units. It makes life easier. So it's going to be the cost of sales on the average stock. So the cost of sales, how many units were sold? 2216, right? The average stock would be the start of the year was 206, the end of the year was 420. So, what is the average there? This is going to be 626 divided by 2, so it's 313. Is that right? Okay. So 2216 divided 313 gives me how many times? That doesn't matter. So it can be 0.8. 7.08 times. Or you could have done it with the figures. They give me my cost of sales is 3102, 400. And they give me the average stock. The start of the year was 101, 090. The end of the year was 373, 800. Can you see what is the average then? Can you see it's just a lot more figures to work with? This is literally a more comfortable way to do it. You understand if I say that? Okay. And you can go see if you can calculate. So now, Just Team Limited. What is PTY Limited? What kind of company is that? It's a private name. So what's the difference between a private and a public company? A private one is only 50 shareholders max. And with a private, if someone wants to buy into the company, they must get the permission of all the shareholders. And they can't be listed on the JSE. Okay. So it's actually a partnership that's ran like a company. So they buy and sell shares. A lot of times families will do that. Families that's together in a business. Because it takes the personal effect away, that you are personally liable. Justine trades in 3 types of footwear. The table indicates the overall performance for the year. The directors are satisfied with the management of running shoes, but not boots and sandals. The boots are imported, and we are the only business who sells it. The sandals are locally made, and all competitors sell them at $4.80. So can you see each one has got 2 points that they already give you. Comment on the stock turnover rates for boots and sandals, and identify the major problem relating each product. So let's look at boots. The markup is quite high and the price is high. But can you see the cost price is also high? Gross profit, total gross profit, can you see it's high? Orders received and orders sold. Can you see how beautiful is that? Exactly what was ordered was sold. Items on hand is 440. That's quite a lot. Okay. Stock on hand is 708. Can you see that's a lot of cash that's tied up in stock? Can you see that? And the stock turnover is 2 times a year. Can you see the stock is selling very slow? But in the end I get a lot of money for it. So what do they want? I need to comment on the stock turnover. So you're going to say the stock turnover of 2 times a year is very slow. What's the major problem? I'm going to say too much stock on hand. And just to make sure, I'm going to say cash tied up in stock. If I look at sandals, does that make sense to you? Tell me if you don't agree, ne? Then if I look at sandals, markup is low, ne? Because we have to sell the same price as the competitors. And can you see my profit is very low? The total gross profit, however, is extremely high because I sell so much. So I received 15,000 orders, but I only sold 11 for. Can you see there's my problem? I don't stock enough. Stock on hand, okay, is 150 pairs. I do not understand how I can have 150 pairs left if I didn't sell everything. How is that possible? No, it's on hand. I can still see it. Yeah, that doesn't make sense. But in any case, stock on hand for the year 54,000. Stock turnover rate 76. So stock turnover rate of 76 times a year is very fast. It's very high, say rather very high. 76 times a year, it's quite a lot, ne? So what problem do I have? We don't have enough stock, not enough stock to how do I say to not make all the orders? To meet orders. Okay, let's see if I was lying. So they say stock turnover rate 2, slow sales, too much stock on hand, 3 marks. 76, high demand, it's very fast. You'll get your mark. Business is not meeting the orders. There we go. Can you see that I didn't write it as eloquently as they did? But I'm still going to get my 6. 6 what? 6 marks. Okay. You're not supposed to say 6, 7. You're supposed to say ratios if you were still in the thing.